guys so much for tuning into today's live stream. Today is June 2nd, 2025. And the first thing I do want to take a look at today during the morning is the economic calendar here for today. So we have here, this is the only thing that's, I guess, that's something that I'm watching is the ISM manufacturing PMI, which forecasts. So it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Is derived from a survey of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions. So essentially, this indicator is a rating on how confident purchasing managers are in current business conditions. A value below 50 is that they're not confident. A value above 50 is that they are confident. Hey, you can kind of see that in 08 and 09. In 08 and 09, they're not that confident. And as you guys can see here, we have almost like a year and a half long of just below 50 scores or below 50 ratings, which is not it's not ideal. So I don't know, a lot of the indicators now have been telling us that we are not in a good economic state. I don't know. Core PCE index month over month. Consumer sentiment is low. Consumer All right. Well, yeah, but like today, the news should be coming out. The news is coming out here at 9 a.m. Central Time, and we also have Fedman Jerome Powell speaking here at 12 p.m. Central Time. But to get started with today's, I guess, technicals here, with the way that we closed here on the daily time frame, I mean, on ES, I would like to see us take out previous day high, but that, I mean, we should have respected this hourly fair value gap and then take out previous day high, but we didn't. But now, I mean, we're starting to get that bullish 4-hour candle closure, which is good. I like to see a bullish intraday time frames closure if we have a bullish daily candle. Let's take a look at NQ. So NQ, we did take out previous day high already. So let me show you guys this here. So NQ. So NQ, we did not take out the swing high right here, whereas NQ we did. So that is a SMT divergence right now. Let's take a look at what how NQ is going to close. So I want to see how we close here on NQ here on the 4-hour time frame and the 8-hour time frame. So depending on how those two time frames close will give me my morning bias, my morning objective, right? And every single candle has an objective. So if we close bullish, then I would like to see us take out the 4-hour high and the 8-hour high. But if we close bearish, then I would like to see us take out, you know, the 4-hour low and and possibly the 8-hour low. So we did not get a very decisive candle closure here on the weekly time frame. So this is the weekly candle here, right? That's where this red line is kind of drawing towards. The way that we close here on this weekly time frame, on this weekly candle, suggests to me that we are rather indecisive, right? It's not clear if we're going to take out the weekly low or the weekly high. I don't want to, you know, confirm a bias here on the weekly time frame. However, today is the first, it is the first trading day of the month, and this monthly candle here from May, we close pretty bullish, right? And I have previous month's high here marked with a plus sign. That means that for the next month, right, for this upcoming month during June, I'm rather bullish, and I would like to see prices take out the monthly high. This is something that I'm really paying attention towards, right? As I'm favoring the buy side delivery. I'm favoring the fact that we should take out the monthly high. And like I said, I don't really have a bias here on the weekly time frame. However, I like the idea of us taking out previous month's high. But for today specifically, it does seem that we have already taken out previous day highs, so I can't utilize the daily time frame, right? And I can't use the monthly time frame for the morning session. That just doesn't make any sense for me to do so. But depending on how we close here on, like I said, depending on how we close here on the 4-hour candle and the 8-hour candle will provide me with a bias. So, like I said, I'm just going to wait until this 4-hour candle closes and the 8-hour candle closes for a morning objective. If we can close bullish, like I said, I would be targeting the high. If we close bearish, then I would be targeting the low. I would give it some more time, about 15 minutes left, until the 4-hour candle closure and the 8-hour candle closure. Before then, I'll hop into one chess game just to see what. Hmm. He's attacking my queen, my king side. I don't think this is a good position for me, to be honest. Yeah. I'm gonna drop this bishop back. Oh, he goes here. Oh, I could have taken with this actually, but still. Is that? Okay, so. Okay, okay. I have to be careful, but. I could have taken this. Well, even if I go this, it's not mate. And oh, I can go here too. Okay, so. Oh my gosh, I can sack this. I can sack this here. And that would be checkmate. Interesting. Oh wow. I feel like I could have done more, but. I gotta manage my time a little bit more efficiently here. Wait, I go here. Wait, so I go here, he takes, I take, he takes, I take. Here? Here. This, okay. actually don't. Okay, that might have been a bad play. I have to trade that for sure. Oh, no. Okay, this is fine. Oh my gosh, he was. Now we're even. Already trolled. Awesome saucy. Awesome sauce. Oh wait, he just goes here. What? I don't know if that was the most well played game, but oh man, that was interesting. Well, we have 5 minutes left, and this is where we are closing on the hourly candle. So with the way that we're closing here on this hourly candle, is it's suggesting to me that we're not going to take out the hourly high. Like the next hourly candle, efficiently wise, right? How it should not take out the hourly high here, right? It doesn't make sense for us to do so. So like, just take a look at this. Is the hourly closure, and the closure is going to be this red line. Is the red line closer to the green line, or is the red line closer to the blue line, right? Relatively just looking at it like very technically, right? The red line is closer to the blue line, meaning it's most likely going to take out the low, and it's not even close to taking out the high. But I mean, I don't want to confirm that bias before we even close, so I'll just leave it at that. But let's take a look at the 15-minute time frame. So here's the 15-minute time frame. We did have this kind of like a, I want to say like a sell-off, but we did have this move lower here. On the 15-minute time frame, which is why it's looking bearish on the hourly time frame. I do one more chess game and I try to keep it fast. If my opponent allows me to do so. Okay, yes, a lot more developed pieces than me. Okay, he's actually allowing me to play pretty fast here, which is cool. He's just gonna trade. He's just gonna trade now. Because he's up a pawn and my freaking king is like in the middle of the board. It's okay, I gotta play fast, so. It's still not an excuse to lose, but. Okay, now I'm up. He needs to bring in his rook, to be honest. But I don't know. Yeah. Hey, he asked me for a rematch, and let's see. I am white this time. I'm stronger with white. Okay. Okay. You wanna play? Do you want to play like that? Okay. Actually, I'll let him take that. There's the open, and looks like as soon as we opened, we did take out the 15-minute low and the 30-minute low. Have yet to take out the hourly low. We'll go like this, castle long. Like this. I don't want his horse going here. Is he gonna go like this? Like this. Okay. Okay, okay. Go here. Oh, whoa, 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 wait. Time is ticking. Time is ticking. Do. This, I can go, oh, I can't go there. my gosh, wait, this is far better move. Far better move. I missed this. Oh, wow, I missed it right there. I missed this. It could have gone here, and then I don't know. Yeah, that would have been. Oh my gosh, I don't know how I missed that, but yeah, going back to the charts. So we took out previous day high. We had SMTs with it. Remember, keep in mind that we did have SMT here at previous day high with ES. So it's a logical area for where we should kind of reverse, right? Not as in like reverse where we freaking take out the yearly low, but as in like a proportionate reversal. So we took out previous day high, and then we had a bearish candle closure after that. We kind of like changed the order flows, and here you guys can see. So whenever we opened up here at 10, we immediately like sold off. We took out the 50-minute low, took out the 30-minute low, and then ended up taking out the hourly low as well. And I mean, this is like, oh yeah, bye man. And this is all pretty much in line with what I was anticipating, right? Because the 50-minute candle closed bearish, causing the 30-minute and the hourly candle to close bearish, then my assumption was that we're most likely going to take out the 50-minute low, the 30-minute low, and possibly the hourly low. And notice where we were like, notice where this 50-minute candle closed as well, right? We're closing right at this little black line right here. This black line right here is the weekly open and the monthly open. So your best sells are always going to be sells above this open. Your best buy orders are always going to happen below this open or near the open. Just keep in mind that, and that's where like the move actually happened. So yeah, just something that you want to draw your attention towards. But yeah, with the way that we close here on the 4-hour candle and the 8-hour candle, I don't really have a bias with the way that we closed. It's rather like I'm not sure, right? I'm uncertain. If you were to tell me like the 50-minute time frame, right, it's really clear to me that we're going to take out the 50-minute low, being this low right here. But with the way that we close here on the 4-hour candle, I'm just not as confident in the delivery for sell side or buy side, either the 4-hour low or the 4-hour high. Not too sure where we're going to go there, where we're going to go on those two time frames. But I mean, now I do want to take a look at my trading journal here with you guys and just do a really quick review. As I did prepare some pros and cons for this week. If you guys have been watching my streams for a while now, you guys may notice that, every single day I go over the pros and cons. These concepts that I go over are concepts that I need to drill into my head, as they're extremely important with the way that I view prices, right? I view prices in a power of three, kind of where I require three things in my trading: higher time frame objective, a model, and an entry pattern. So this takes me to my first pro, which is to continue to take consistent trades, right? That's my first pro always, is to maintain consistency with the way that I take my trades. So if I were to go over 2 trades here with you guys are going to see 3 similar characteristics at least in those 2 trades, right? I am always requiring a higher time frame objective, a model, and a entry pattern. Those are 3 things in which I always require, right? A higher time frame objective is essentially what's the bigger reason for why prices should be continuing lower or higher, right? If we should be expanding towards a high, or if we should be drawing towards a low. A higher time frame is it's not subjective, it's just relative to your model. So if your model's is on the 15-minute time frame, your higher time frame could be the 30-minute time frame. But the higher time frame could also be the daily time frame if your model was on the 8-hour time frame, something like that, right? But understanding what the higher time frame objective is telling you, what the order flow is, and the way that you align yourself with that order flow is your model. So your model is always going to be on the time frames that are lower relative to your higher time frame. And you want to have that model in alignment with your higher time frame order flow. So if the higher time frame order flow is bearish, and let's just, for example, the higher time frame here would be on the weekly time frame, and the weekly time frame is bearish, then your model could be based off of the daily time frame, and the daily time frame should be suggesting lower prices as well, right? It should be suggesting that we should take out the daily low, whereas it's in alignment with the weekly order flow, which is the weekly low. And the third component to my trade is always a entry pattern, which is a fair value gap. My fair value gap is my entry pattern. Your entry pattern could be a order block, it could be a breaker block, it could be a mitigation block. I don't really see prices in blocks like that. I only pay attention to power of 3, fair value gap, and SMT. Those are kind of like the 3 really concepts that I utilize from ICT himself. But yeah, an entry pattern. Your entry pattern should be supporting your model, and your model should be already supporting your higher time frame objective. So everything should be working together. Imagine that strategy as just a set of gears, right? Where, the biggest gear could be the higher time frame objective. The medium-sized gear could be your model. The smaller gear could be your entry pattern. But they should all be supporting each other, right? They're not conflicting with one another. All of those time frames, notice how on every single component, right? The entry pattern, the model, the higher time frame objective, they come from 3 sources of time frames, but all 3 time frames are supporting each other. They support the same idea whether we should go up or we should go down. Prices either goes in either higher or lower. It doesn't really stay the same unless it's market closure or just stagnant. But yeah, you don't want to be trading when conditions are stagnant. You want to be in movement where it's up or down. But yeah, so kind of view this strategy as a set of gears almost. But yeah, that's the first pro. The second pro for me here for, I guess, this previous week is to actually utilize a model to align myself with the higher time frame order flow. If I don't have a model, to align myself with the higher time frame order flow, I just don't take a trade, right? It's really tempting for me to have an idea of where prices wants to go, but I don't, and if I don't have a model, it's really tempting for me to take that, to press the button. But consistency, discipline, those are kind of the, I guess, non-technical facts aspects of trading, right? You don't want to take a trade if your strategy isn't telling you to do so. And my strategy is always going to require me to have a model that aligns with the higher time frame order flow. And that's the second pro here. Oh, and one thing that I did forget to mention is whenever you go from one time frame to another for your strategy, you don't want to, for example, you don't want to go from the weekly time frame all the way down to the 1 minute time frame. So let's just say your weekly order flow, right? Your weekly bias is the weekly low. Your model should not be based off of the 1 minute candle closure. It's like whenever you go from the weekly time frame all the way down to the 1 minute time frame, that's like reading page 1 and skipping all the way to page 50. You're missing out on 49 pages worth of information, and you just have no idea what went on in between those 2 pages, right? You don't know if there's been new characters that has been created, that has been mentioned, or that has been introduced. You don't know any of the plot. You don't know if any significant events has occurred. Yeah, so you always want to go from one time frame down to a time frame that's relative to that. So for example, 10-day time frame, daily, and 8-hour. That's reading from page 1, page 2, page 3, page 4, page 5, etc. The third pro coming into this week is to utilize SMT. SMT, like I said, like I showed you guys here at the beginning, where I mentioned that ES, we did not take out previous day high, whereas NQ, we did take out previous day high. So us continuing lower here, or just having this kind of reversal, is to be expected, right? Because of the SMT. Swing lows and swing highs will always be accompanied with an SMT, some sort of SMT. Yeah, so utilizing SMT, and like if there's a lack of SMT, so what does a lack of SMT tell you? It's telling me that, hey, we should continue to go in that specific direction. It's just higher probability that we should continue higher. For instance, if there's a lack of SMT, but if there's a presence of SMT, if there's SMT between ES or NQ, then you might consider not taking the trade at all. Or if you are in a trade, and let's just say that you're in a trade on NQ and ES, we've taken out the high that we're targeting here on ES. Or if ES takes out the high, whereas NQ did not take out the high, while you're in a trade, then you will have to move stops to break even to prevent any unnecessary losses. So that's utilizing SMT and kind of understanding what SMT is. And last thing but not least, know when to pivot. Understanding that every single time frame has an objective, and so this kind of prevents you from not solely being a one trick. You're not going to be on one single time frame for the rest of your trading career. If you know that every single time frame, you should know that every single time frame has an objective, utilize that to your advantage, right? If the weekly objective has been completed or is unclear what the weekly objective is, then go onto a different time frame, such as the daily time frame. And if the daily time frames also doesn't have a clear objective or its objective has already been completed, then go on to the 4-hour time frame, go on to the 6-hour time frame, go on to the 8-hour time frame. And you just keep repeating those steps over and over and over again. But let's just say that you have no time frames to utilize. You can't utilize the 15-minute, you can't utilize the 30-minute, you can't utilize the 1 hour, you can't utilize the 4-hour, etc. If you can't utilize any time frame, what's the best thing to do? To wait for a new candle to close. How long does it take for a 15-minute candle to close? 15 minutes. So every single 15-minute interval will show you, will present you with a new objective. Utilize that to your advantage. How long does it take for a 4-hour candle to close? 4 hours. So be patient, wait 4 hours. And once that 4-hour candle closes again, then you'll be presented with a new 4-hour candle objective. It's rinse and repeat. Do that over and over every single day, and I guarantee you, one day of this week or next week or the upcoming week, whatever, there will be a opportunity for you to be a part of. And once that opportunity presents itself, take it. So know when to pivot. And just some things that I can work on is to be active. Like I mentioned to you guys, every single 15 minutes, a new 15-minute candle is going to close, meaning a new objective. What does a new objective mean? A new opportunity. So for me to be actively trading the charts, I don't have to be on the charts literally every single second, every single minute. I can be on the charts in every single 15-minute intervals, because I know that every single 15 minutes there will be a new objective, and possibly with the new objective, a opportunity. And the second thing that I should continue to work on, or maybe just something for me to do, is to do a comparison analysis for Walmart and a DCF model for Goldman Sachs. This is not the same thing as technical trading wise. It's a little bit more fundamentals. Comparison analysis is you're using companies in the same industry to value a company, right? So Walmart, I could utilize information from Target, Costco, Kroger, Audis, Sam's Club, whatever. Those similar companies to kind of come up with a value for the cost per share, right? But yeah, some improvements. The improvements here are just a summary of what I should continue to do here. So improvements for this week: continue to be consistent. Require those two components, or not two, but three components for my strategy to play out, right? Higher time frame objective, a model, entry pattern. Second, if there's no model that aligns with your higher time frame objective, so even if you know what the higher time frame objective is going to be, even if you know what the direction is, if you don't have a model to align yourself with that order flow, no trade. Don't take it. Utilize S&T before a trade and even during a trade. If there's S&T during your trade, move your stops to break even. And if you get stopped out at break even, you've taken no damage. You've created a little buffer for yourself to protect yourself against any losses. And that sums it up for the pros and cons here for this week. Tomorrow, expect the same thing. I'll be going over the same thing again, just to be consistent and just to drill these concepts into my brain. And I did tell myself that I was going to do a weekly market analysis here for you guys. So the first thing I do want to mention is on NQ, pay attention to the monthly candle closure. So I did briefly mention it at the beginning of the live stream about how we close here on the monthly time frame. So this right here is the monthly candle, right? This is May's candle's closure. And the objective for this monthly candle is I am anticipating for prices to take out the monthly high. With the way that we close bullishly, right? Easiest assumption for me to make is that we should take out the monthly high within someday this upcoming month. So it could be today, it could be tomorrow, just sometime within this month's trading, we should take out previous month's high. And I also mentioned that when zooming into the weekly time frame, I don't necessarily have a bias due to the uncertainty of the weekly power of 3. So this just basically means that due to the way that we close on the weekly time frame, I don't necessarily have a bias. It's like I said, the order flow here on the weekly time frame, I can't decide if we should take out the weekly high or the weekly low. Based on the closure, it's too indecisive, so I'm not going to utilize it. Same thing here on the daily time frame. We have already taken out the daily high, right? The daily high has already been completed, so I can't utilize that daily time frame. I could utilize, like I said, the intraday time frames, such as the 4 hour, 6 hour, 8 hour. For today, I utilized the hourly time frame. What did the hourly time frame tell me that we should do? Take out the hourly low, which we did. Same thing on the 15-minute time frame. With the way that we closed here on this 15-minute candle, it was suggesting that we should take out the 15-minute low. And like I said, you do that rinse and repeat over and over until you, until you reach your whatever goal. Yeah, so NQ, I don't have a weekly bias. However, on the monthly time frame, I am anticipating for higher prices. And no weekly bias. Game plan for this week is to utilize the daily time frame. I have the same approach on ES as NQ. So copy and paste whatever I just said for ES, use that approach. And on the dollar is at a kind of a pretty bearish state, I'm not gonna lie. I am favoring the fact that we should take out the 4-month low on the dollar. So let's take a look at the 4-hour time frame on the dollar here. All right, so it does look like we did take out the monthly low here on the dollar. And yeah, so let's take a look at the 4-month candle here on the dollar. The way that we close here on the dollar on the 4-month time frame suggests to me that we should take out this 4-month low. That's the bare minimum objective that I am anticipating for prices to do. I want to see us go down in the dollar, which isn't good if I'm a United States citizen, right? If the dollar goes down, the confidence, investors' confidence in the dollar just drops, and it's not ideal. But yeah, I am seeking higher or lower prices on the dollar, which isn't good. ISM manufacturing PMI numbers, it came in at lower than forecasted, 48.5, which is another month of bearish sentiment. Like I said, these indicators, it's not just this, it's GDP, it's inflation, it's consumer confidence. Everything is not suggesting for us to be continuing higher here on NQ. But for some reason, the stock market doesn't really think that we're bearish, doesn't think that we're weak. So, I mean, I don't know. I'm just going to take advantage of that. Take advantage of these market moves. I don't care if we're going up or down. If I can trade in either direction, that's fine with me. But yeah, I mean, it's been 52 minutes so far. I do want to say thank you guys so much for tuning into today's live stream. I'll be back here tomorrow at 8:30 a.m. Central Time. And